Hello, guys. Welcome to today's lesson. Okay, so I remember I gave my word. I made some promises that I was going to be sharing courses that are sharing some forex trading courses with you guys. So I'm here to fulfill my promise. Okay, so we're going to be beginning with the BTMM course, and the BTMM is actually an acronym for Beat the Market Maker. Beat the Market Maker. Now, who is the market maker? In currency trading, basically, market makers function as intermediaries in sales and purchases, okay, between two parties and two currencies. Now, for example, a bank will always function as a market maker when it connects sellers of the United States dollars to sell to investors who have euros in exchange, okay? So that's who a market maker is. Now, market makers are also traders, okay? They are basically traders. The major difference between the market maker and the retail trader is that they have access to large volume or capital and so are able to move market prices at their will. Now, to move the forex market, okay, to move a currency pair by one pip requires a large amount of volume. You and I, as retail traders, we do not have that luxury. Okay, so that's one major difference between us and the market maker. They've got large volumes at their disposal, so they're able to play around with the market. Okay, now the goal of the market maker is simply to make profits. Okay, you need to understand that they are in the business to make profit, just like you when you decided that you want to start trading forex. Okay, your goal was also to make profit. So also is the market maker. Then you also need to understand that they are not your friend. The market maker is not your friend. Okay, they are always trying to buy at a lower price and sell at a higher price. Now, what's the main objective of the market maker? Now, the market maker actually try to induce traders to take positions. Okay, what do we mean by induce traders to take positions, or how do they achieve that? They achieve this by using a range of price movements, okay, to trick traders into taking positions in a given direction. And then they reverse it again. Now, what happens to you as a trader? You feel frustrated and painfully close your positions in losses. Now, this means that the market maker has been able to sell to you at a certain price and buy it back from you at a discounted price or at a lower price. Now, what does that mean? That you've made some losses, but the market maker has made some gains. Okay, so that's one major objective of the market maker. Now, what's the next thing they do? They try to create panic and fear to induce traders to become emotional and think irrationally. Now, how do they get to achieve this? Okay, they do things like you see the market moving in some funny ways. Okay, you see quick moves, spike candles, news releases, strange price behaviors, and all of that. Okay, some people will always say, "Oh, today's news. Today's news. What direction is the news going to go? What is it?" And all of that. Now, these are things that you're going to be learning during the course of this course, and I advise that you take this very seriously. So you're going to understand that there's nothing special about the news. There's nothing like because the um, Powell released a particular speech, so the currencies had to go up or the currencies had to come down. No, all these are market makers' tools they're using, making sure that the market goes in the direction that they want or they expect. And at the end of the day, why are we learning this course? So that we'll also try to align ourselves with the market makers, as in trade in the direction of the market maker. So I want to advise you, do not try to forward the video because there are some things I'm going to be saying, okay, that I might not have in the slide. So you need every bit of the information you can garner. Okay, so that is it. Then what other objective the market makers have? They try to hit the stops and clear the board. Okay, what do we mean by they try to hit the stops and clear the board? They do this. They just try to ensure that they frustrate us into margin troubles and eventually out of the game. Okay, sometimes you see some people trying to do maybe with $100, they're trying to see how they can double the $100 just in one trade or make it up to 1,000. Okay, now the person can actually have predicted the direction correctly, but you know what the market maker will do? They'll try to move the market in such a way, okay, that okay, let's say the person entered a buy. Okay, let's say the person entered a buy somewhere here. Okay, you predicted that the market was going to go up, but somehow this is where you placed your trade. You placed your trade somewhere here. Okay, now the market maker would try to do something to shake your trade, to stretch you to a limit, so much so that you start getting margin calls. Okay, and at the end of the day, what do? They clear the board, hit stop losses, get people into trouble by closing. Some people, of course, are forced to close their trades in losses and all of that. Then at the end of the day, what do? They then go in the direction that you had predicted before. And what happens to you? Frustrations, feelings of frustrations and pains. Oh, what happened? How come I lost this trade and all of that? Okay, so these are some of the things that the market maker does, and we are yet to learn how to trade in line with the market makers. Okay, yeah, so now a typical trading day. What's a typical trading day like? A typical trading day basically has got three sessions. Okay, we've got the Asian session, the London session, and the New York session. Okay, now we're going to be okay. Let me just quickly say a little bit about them. The Asian session is more of we also call it the Tokyo session. The London session is also called the European session or Europe session. The New York session is also the US session. Okay, now they've got special times of the day when we get to see them. For example, the Asian session opens between 12 midnight, okay, 12 midnight GMT to 0700 GMT. Okay, that's when you're going to see the Asian session, and it's got a lot of characteristics. Okay, one major characteristics of the Asian session is that that's where we're going to see the markets in a very choppy state. Okay, a lot of choppiness, a lot of randomness, no major movements, just up, down, up, down, up, down, moving within a range. Okay, that's what the Asian session is characterized with. Then, what about the London session? The London session runs between 7:30 GMT to 1300 GMT. Okay, and that's basically where you get to see major market moves. Okay, and that's one of the things we're trying to do to align ourselves so much so that we'll be able to capitalize on such trades. Then the New York session also, we get to see a lot of major market moves there. The market makers use the New York session to either make reversals, okay, either make reversals into reverse the market directions or give us continuation pattern for us to continue. And then the New York session, the timing is usually from 13:30 GMT to 1800 GMT. Okay, so accumulation. What's accumulation? The initial high and low of the day are set during the accumulation time. Okay, and that's one of the characteristics of the Asian session actually. Okay, you're going to see a lot of accumulation of contracts, because now what happens? People are feeling, since the market is not really making major moves, but then they keep putting some spikes, making some fast moves. What are they doing? You get to see the market rushing up, and you're saying, "Oh, he's on a buy, he's on a buy." You enter a buy, good, you're trapped. Another person comes and say, "Oh, the market is selling, is selling, is selling." You enter and say, "Wow, you've been trapped. You've been trapped in that range." Now you get to be trapped in a range for like several hours, and then you feel frustrated. Imagine having to be trapped in a range like this for several hours. Okay, market is not moving past this just like this, just like this, just like this, just like this. And then you're wondering, oh, what's going on? What's going on? At a point, you just get frustrated and you close your trade in a loss. Wow, your loss is the market maker's gain. So these are some of the things that we are trying to expose you to, so you know what you're doing whenever you open your chart. Okay. Then the stop point, there's something called the stop points. Now, when the market maker has formed the low of when the market maker has done their choppiness and all that during the Asian session, remember that's why I said that's why we get to see the accumulation. When they've done all their accumulation of contracts, everything in here, okay, the let's say they want to go high, they want to buy, the market wants to buy. You know what the market maker will do? They will drop the market away from the Asian range. Can you see that? They drop the market away from the Asian range, okay, and then they do what? They form a pattern like a W, okay, and then they start trading away. They start trading away. Okay, so that's what the market maker. I'm going to be showing you all of this in the charts. Okay, they start trading away, and you'll be wondering, wow, what's happening? Now, this is another thing. A lot of people that thought that the market was going to, because the market broke out of this. Okay, breakout traders will say, oh, we are on a sell, we're on a sell, we're on a sell, and then they start piling up on sells that, oh, the market has broken out of this range. It has broken. But then what does the market maker do? They come back, they come down, give us a pattern and start trading in the opposite direction. And then you start asking yourself, what's going on? I need to learn how to trade. What's happening? My strategy and all of that. So you are actually the right place. Okay. We're going to be learning all of this. And the next thing is the trend move. Yes, that's what I just gave you a clue. The trend move is basically the real move that usually goes slow and steady for about 6 to 8 hours. Now, if you're patient enough, you will never miss it. The problem with us is we are not patient. I'm not surprised because I struggled with lack of patience for several years too. Okay, so we want to make billions of dollars in 2 seconds. We want to make billions of dollars in 2 seconds. Okay, so I understand that totally. But then, as a trader, you've got to learn patience. And when you're patient and understand everything that I'm going to be exposing to you here, you would be able to spot the trend moves and all of that. Then what about the last? Then we have the end of day reversal of the eye of the day and back into consolidation. What does it mean? Now, this is the Asian range. Okay, market breaks out of the accumulation, gives you a stop hunt, during the London session, then starts trading the trend starts trading, and then what happens in during the New York session? You see another pattern, and then it drops, okay, and then starts accumulating again. That is what we get to see in a typical trading day. That's what we get to see in a typical trading day, okay? That's what we see in a typical trading day. And then I'm going to be explaining to you the anatomy of a candlestick, and then you get to understand why some of these things happen the way they do, okay? So that is that. Yeah. So this is what I just explained. Okay, so this is a picture showing that we have the Asian range, which is the accumulation phase, then the stop point, which is the fake move out of the Asian range. Now the market maker knows it's going to buy. Then what happens is drops it to deceive people that he was going to sell, and then and then it trades in the opposite direction. Then after that, it reverses the market into what? Reverses the market into the New York what? During the New York session, sorry, back into consolidation. Okay. So the phases of the market maker cycle. So we have induce, trap, and shift. That's just the phase of the market maker cycle. We induce, we trap, we shift. Then we have the 3 levels of rise and drop. Okay, I'm going to come into that very soon. Now we have the M or W formation at the high or low of the day, reversal back into the Asian range consolidation. Now, if you notice, you realize that with this diagram, I have been able to explain these phases of the market maker cycle to you. However, I'm going to be going in depth in the next video, okay, into these things. I'm going to be going in depth into them, just like this. These are the phases of the market maker cycle: the accumulation, the stop hunt, the trend move, the reversal back into consolidation. Okay, so yeah, this is another diagram illustrating that. Okay, the so this is where we call this the low. When the pattern comes, that means it has given us a low of the day, and then we move back into consolidation. So that's all simple stuff. Okay, so I'm going to see you in the next video. I believe you've learned something. So let's meet in the next video. Thank you.